Thank you for joining me today to discuss an exciting development in Southeast Asia's financial landscape. The region's venture capital associations have taken a bold and impressive first step toward enhancing the investment value of its startup ecosystem and, by extension, its stock markets. On April 17th, 2025, these associations from Singapore, Indonesia, Thailand, Vietnam, and Malaysia unveiled the Maturation Map: Corporate Governance in Southeast Asia Private Markets. This groundbreaking document sets a regional benchmark for startup governance, and if implemented effectively, it could transform Southeast Asia's markets into a magnet for global investment. Let me explain why this initiative is so significant and how it positions the region as a promising destination for capital. First, let's consider the context. Southeast Asia's startup scene is vibrant but young, often described as still learning by industry leaders like Shane Chesson of the Singapore Venture and Private Capital Association. The region has seen explosive growth in tech startups, from Indonesia's e-fishery to Vietnam's Scola and the Philippines' PayMongo. However, high-profile governance scandals, such as e-fishery's alleged five-fold revenue inflation, have exposed critical weaknesses. These incidents erode investor trust and hinder the region's ability to attract long-term capital. The Maturation Map directly addresses these challenges by establishing a comprehensive framework to strengthen governance across startups, from pre-revenue ventures to those preparing for IPOs. This is a proactive move, signaling to investors that Southeast Asia is serious about professionalizing its markets. What makes this initiative so impressive is its scope and collaboration. The Maturation Map isn't just a set of vague principles, it's a practical guide crafted with input from venture capital firms, legal experts, governance advisors, and regulators across 5 countries. It covers the entire startup lifecycle, offering actionable steps to reduce governance failures, improve due diligence, and prepare companies for successful exits, whether through IPOs or mergers. By setting a unified regional standard, Southeast Asia is creating a predictable and transparent environment that investors crave. This collaborative effort shows a collective will to elevate the region's innovation economy, making its stock markets more attractive to both domestic and international investors. Another standout feature of the Maturation Map is its forward thinking use of technology. The guidelines advocate for AI driven governance solutions to detect financial anomalies, automate reporting, and enhance real time oversight. In a region known for its tech savvy startups, this integration of artificial intelligence is a game changer. It not only raises the bar for transparency, but also makes it harder for fraudulent activities to go unnoticed. Imagine a startup ecosystem where financial mismanagement is caught early, ensuring that companies remain on track to deliver value. This technological edge could set Southeast Asia apart from other emerging markets, making its stock markets a safer and more appealing place for investment. Now, let's talk about the potential impact on stock markets. When startups adopt strong governance practices, they become more resilient and scalable, increasing their chances of successful IPOs. A wave of well governed IPO ready companies from Southeast Asia would invigorate regional stock exchanges, attracting institutional investors and boosting market liquidity. Moreover, the Maturation Map emphasizes accountability with recommendations to enforce shareholders' rights and explore legal avenues for governance breaches. This focus on deterrence and enforcement builds investor confidence, ensuring that money invested in Southeast Asian markets is protected. If these guidelines are effectively implemented, the region could see a virtuous cycle of trust, investment, and growth. Of course, the key phrase here is effective implementation. The Maturation Map is described as a living document designed to evolve with market conditions and feedback. This adaptability is crucial in a fast-moving region like Southeast Asia. Regular audits, board training, and ESG tracking, as highlighted by Malaysia's Engsai Kit, will be essential to maintain momentum. The challenge lies in ensuring that startups, often focused on rapid growth, prioritize governance without stifling innovation. However, with the backing of regional venture capital associations and a clear playbook for founders and boards, the groundwork is in place for success. Investors should take note. Southeast Asia is laying a strong foundation for sustainable growth. In conclusion, Southeast Asia's Maturation Map is a remarkable first step toward enhancing the investment value of its stock markets by addressing governance gaps, leveraging technology, and fostering regional collaboration. This, this initiative sets the stage for a more transparent and trustworthy startup ecosystem. If implemented effectively, Southeast Asia's markets could become a beacon for global capital, offering attractive returns in a dynamic and innovative region. For investors looking to diversify their portfolios, this is a moment to pay attention. Southeast Asia is not just open for business, it's building a future where money can thrive.